Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Friday the 10th of January. Starting off with AFC Energy, which looks like it's finished its recent consolidation after the November peak through 25 pence. So just need an end of day close or end of week close above 20 pence to open up the possibility of a move to the top of a rising November trend channel at 32 pence. The other bull aspect here is the way that in the consolidation the shares never even touched the 50-day moving average, currently at 14 pence. So looking pretty strong, and indeed the 50-day line would be a decent end-of-day close stop loss once or if the shares manage to crack 20 pence over the next session or two. Sinocode is next, and this looks like another stock which is getting ready to head higher after a consolidation, pulling back from 4 pence back down to sort of 2.8. Right on the floor of a rising trend channel from the end of October at 3 pence, and while we're above 3 pence, looking for an initial target there to fill the gap. I suppose it will at least retest 4 pence, but the 200-day line at 4.5 after that, and then best case scenario over the next month or so, up to 7 pence at the top of the channel. On to Enquest, which was going to do yesterday, but didn't look exciting enough. Today it's gapped higher, so that is technically exciting. The other points, which are plus points, are the way that we're currently, apart from the gap higher today, we're currently in the likely run-up to a golden cross between the 50 and 200-day moving averages, just below or just around the 20 pence level. Normally the run-up to a golden cross, the week to 10 days before the golden cross actually happens, is the strongest part of the cycle. The shares close above that old July peak at 24 pence. What's that? 24.42 pence. Should be on the way towards a top of November 2018 price channel target as high as 33 pence over the next few weeks, maybe 4 to 6 weeks on that. Stock which is normally looked at quite closely and with great enthusiasm is Europa Metals for some reason. Here we see that over the last 24 hours it's broken out of the falling wedge formation triangle based at, with the resistance line there at point 021 or so, 022 perhaps. End of day close or weekly close above the 50-day moving average at current levels should be enough to take the shares back up on a journey towards retesting post-October resistance at 0.04 pence. RSI pushing through neutral 50, also a leading indicator on a potential move to the upside. Stock which has been in the wars over recent months is certainly Regal Petroleum, but stock just making the first attempt at a bear trap rebound from below the December support at 21.5 pence. End of day or end of week close today above 24 pence should be enough to trigger at least an intermediate rally, perhaps back to the 200-day moving average area at 33 pence. Stop loss back below, I suppose, 21 pence should cover it. Going on to one of today's top risers at Richland Resources. Here you can see that the stock just needs to break this line of resistance from last month at 0.15 pence. If we can do that today or early next week, we could get a partial or even full retest of the best levels of last month through 0.4 pence. Only back below 0.1 pence really, and a support line from November really cancels or at least delays the recovery argument there. A couple of stocks which I haven't looked at for quite a while. First one is Tower Resources, which looks like it's basically managed to break the neckline of saucer formations, not really a inverted head and shoulders, but more a saucer formation there. That neckline running at the 0.45 pence level, while we hold above that. Looking to fill the gap up to 0.7 pence, rather, 70 pence, but a bit ambitious, up to 0.7 pence from September. Obviously, initial target there, the 200-day line at 0.64. Stop loss back below the 50-day moving average at 0.38 should be appropriate. Finishing off with Two Shields, where I've seen a bit of a buzz on Twitter Also, we have technically a break of this symmetrical triangle there through the 0.12 level and through the 50-day moving average. Obviously, the initial target there, 0.15, which is post-November resistance, but clearing that, we've got a best-case scenario target as high as 0.23 pence, while we hold above the 50-day line at 0.11. That's it for me. More updates on Monday.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.